All right, let's get right to it. The stock you asked about, Strive, is trading under the ticker $ASST, and it is in the middle of an absolute melee this morning. As of 9:45 a.m. Eastern, Strive Inc. $ASST is trading at $1.43 per share. That is a blistering move higher, up over 60% on the day from its $1.10 close on Friday. The volume is completely staggering. We are just 15 minutes into the trading session, and 267 million shares have already changed hands. To put that in perspective, its average daily volume is around 6 or 7 million shares. We saw a hint of this on Friday when it traded 247 million shares, but this morning's gap up and continued surge confirms it. This is one of the most watched, most volatile, and most misunderstood stocks on the market right now. Now, I know what the immediate expectation is. When most people hear Strive, they think of the asset management firm founded by Vivek Ramaswamy. They think of the anti-ESG or excellence-focused ETF provider. They think of funds like DRLL, the energy ETF, which uses its shareholder votes to pressure companies to drill for oil, not to pursue social agendas. That is the common ground. That's the narrative that put the name Strive on the map. And for the past couple of years, that's all it was. A private asset manager, much like Fidelity or countless others, just with a very different, very vocal investment philosophy. The expectation is that we're here to talk about that ETF business. Here is the reality, and it's the reason $ASST is exploding. That private asset manager is not the story anymore. It's just one piece of a much larger, much stranger, and infinitely more speculative new entity. Just last month, in September 2025, the private Strive Asset Management executed a reverse merger with a tiny publicly traded company called Asset Entities, taking over its name and, most importantly, its NASDAQ ticker, $ASST. At the same time, the company announced a complete pivot. The new Strive Inc. is not just an ETF provider. Its new primary mission is to become the world's first publicly traded asset management Bitcoin Treasury company. The original $2 billion ETF business is now just a subsidiary, a cash flow generator for this new, incredibly ambitious and high-risk grand plan. What you are watching today, this 60% surge on a $250 million shares of volume, is the market, and especially the short sellers, waking up to the fact that ASST is no longer a tiny failing shell company. It is now a highly capitalized, aggressive, leveraged proxy for Bitcoin. The mechanics of this surge are critical to understand. This isn't just retail traders on their Robinhood app chasing a headline. This is a structural market event. As of the last filing, $ASST had a reported short interest of nearly 39%. That is an astronomical number. It means that for every 100 shares in the public float, 39 of them were held by traders betting the stock would go to zero. This was a smart bet when $ASST was just the legacy Asset Entities, a company with virtually no revenue and horrific financials. But those shorts got caught. They were betting against a shell company, and they woke up to find they had actually shorted a Bitcoin hoarding dragon. Today's 60% gap up is a catastrophic margin call inducing short squeeze. And what's adding fuel to the fire? The options market. We are seeing massive call option buying, specifically for the January 2026 $1 and $1.50 strike prices. This creates a feedback loop. As the stock rises, market makers who sold those calls are forced to buy the underlying $ASST stock to hedge their position, driving the price even higher. This is a technical setup for extreme, face-ripping volatility. So what is this new company? What is this Bitcoin Treasury 2.0 model that has the market in such a frenzy? When Strive completed its merger in mid-September, it didn't just get a ticker, It also raised $750 million in a private placement, a PIPE financing deal, with warrants for another potential $750 million. That's real capital. Then, just 10 days later on September 22nd, Strive announced two more bombshells. First, it was buying 5,816 Bitcoin directly for $675 million. Second, it announced an all-stock merger with SMLR Scientific, $SMLR, another company that had recently pivoted to a Bitcoin Treasury strategy. This deal, valued at a 210% premium to SMLR's stock price, brings SMLR's 5,000-plus Bitcoin onto Strive's balance sheet. When that deal closes, the new Strive Inc. will hold over 10,900 Bitcoin. This immediately puts it in the same league as MicroStrategy, making it one of the largest public holders of Bitcoin in the world. But here's the contrarian take, the part that separates this from just another company buying Bitcoin. Strive's plan, as they've laid it out, is far more complex. They call it a three-engine model to maximize Bitcoin per share and outperform Bitcoin over the long run. This isn't a passive investment. Engine 1 is the most novel. They're using Section 351 of the U.S. tax code to create a system where large Bitcoin holders can swap their private Bitcoin for ASST equity without triggering a capital gains tax event. This is a brilliant and audacious move. It's an attempt to become a tax-advantaged on-ramp for Bitcoin whales to move their holdings into a public, liquid, and regulated vehicle. Engine 2 is a cash-at-a-discount acquisition strategy. Strive is actively targeting other public companies that are trading for less than the cash on their balance sheets, with the stated goal of acquiring them, liquidating their fiat treasuries, and converting it all into more Bitcoin. The SMLR Scientific deal is the first example, though it's more complex as Strive is also acquiring SMLR's historically profitable diagnostics business, which it says it will monetize or distribute later. Engine 3 is institutional leverage. The company plans to use sophisticated derivatives, options overlays, and prepaid forwards to gain synthetic Bitcoin exposure and manage risk, all with the goal of increasing its Bitcoin per share metric without endlessly diluting stockholders. This is where the expectation of a simple anti-ESG asset manager completely shatters against the reality of what $ASST is trying to become. This is not a stock for your quiet individual brokerage account where you hold Apple stock and Tesla stock. This is not an investment you make through a SoFi Invest robo-advisor or as a part of a balanced Schwab Intelligent portfolios. This is a highly complex, highly leveraged special situation vehicle. The original Strive business, the $2 billion in ETF assets, is now just the stable, cash flow positive base camp for this extremely ambitious climb-up Mount Bitcoin. That business, which competes with Fidelity ETFs and other index providers, is what gives this whole operation a veneer of stability that other Bitcoin-related companies lack. Let's look at the risks because they are as massive as the potential. First, execution risk is high sky. This three-engine strategy is incredibly complex. Can they successfully integrate SMLR Scientific while spinning off its legacy business? Will Bitcoin whales actually take them up on this Section 351 tax swap offer? Can they navigate the complex derivative markets to add leverage without blowing up? Second, financials. The legacy ASST company they merged into was a dumpster fire with negative margins in the triple digits. While the $750 million cash infusion is a lifeline, the company's core profitability is non-existent. Third, dilution. The SMLI deal is all stock. The $750 million PIPE came with warrants. The share count is ballooning, which is the direct enemy of their stated Bitcoin per share goal. And finally, the obvious one, Bitcoin volatility. ASST is now a leveraged proxy for BTC. If Bitcoin falls 20%, $ASST will likely fall much, much further, especially after a 60% squeeze higher. Right now, there are no mainstream analyst ratings on $ASST, no price targets. This is uncharted territory. The professionals at places like Fidelity Investments or Fidelity Wealth Management are likely telling their clients to stay far away from this, treating it as pure speculation. But on the other side, some very smart, very speculative hedge funds are jumping in. Institutional filings show names like Millennium, Hudson Bay, and even the crypto-native Pantera Capital have taken new positions. They aren't buying this for their clients' Fidelity IRAs. They are making a high-stakes bet that Strive can pull this off and that the short squeeze has legs. This is a battleground stock in its purest form. Many people looking for investment help or the best investing sites for self-investing are probably watching this. And the truth is, this is not the place to start. This is the deep end of the pool. This is a stock that could go to $5 or